So welcome to day 7. I'm going to share the lessons that were, well, frankly, beaten into me and that forged my entire approach to the markets.
And this is the absolute truth. I'm serious. You can read every single book on trading out there, but you know what? Nothing prepares you so that psychological battlefield of putting your own money on the line, one click at a time. The stuff I'm about to share wasn't learned in some seminar. It was paid for, with interest, directly to the market.
So yeah, let's rewind to the beginning. My first real jump into trading was just fueled by pure excitement and, let's be totally honest here, a whole lot of ignorance. I saw the charts zipping up and down and I thought, oh yeah, I can catch that.
My strategy, if you can even call it that, was basically to be everywhere at once. I was trying to scalp every little wiggle on the chart. If it went up, I was in. If it went down, I was in. It wasn't some kind of strategic exploration, no. It was just a classic, unfiltered textbook case of FOMO. And because of that, my trading volume just went through the roof. I was completely mistaking constant motion for actual progress. I was always opening and closing positions because, in my head, if I wasn't in a trade, I was losing money. Sound familiar to anyone?
So after all of that, all the stress, the screen time, the constant clicking, my net profit was a big, fat 0. Actually, you know what? Let's be real. It was negative. Once you factor in the slippage, the commissions, the bad trades, all that frantic activity had done nothing but dig me a hole. And that, right there, was my first, very expensive lesson.
It became clear, and pretty fast, that my problem wasn't a bad market. The market was just doing its thing. No, the real enemy was staring right back at me from the reflection on the screen. It was my own psychology. It was my own flawed way of making decisions. So I had to stop and ask myself the tough question. You know, this wasn't just bad luck. What were these invisible forces that were driving my decisions and just quietly bleeding my account dry?
And here they are. These were the culprits. FOMO, fear of missing out, had me jumping into trades way too late. Loss aversion, that made me hold on to losing trades, just hoping and praying they'd turn around. And a couple of lucky wins, oh man, that just triggered massive overconfidence, which led me to take completely reckless, undisciplined risks. See, these weren't market problems. They were my own mental traps.
Realizing all of this, that was the turning point. That's when I stopped being a gambler and I started trying to think like a professional. It meant I had to completely overhaul my entire philosophy about what trading even is.
And this slide, this right here, is the entire shift in a nutshell. My focus changed completely. I stopped asking, how do I win more? How much can I make on this? And I started asking, how do I lose less? What's the absolute maximum I'm willing to lose if I'm wrong? That focus on defense, on protecting your capital, not just chasing profits, that's the bedrock of professional trading.
This table pretty much maps out the whole journey. I started right there in phase 1, zero risk control, catastrophic drawdowns, total beginner stuff. But by phase 3, you can see the change started. I began implementing risk controls. My results were still just improving, but look at the drawdown. It was stabilizing. The bleeding had finally stopped.
So, out of that fire, I basically forged a set of rules that were totally non-negotiable. These aren't just suggestions. For me, they became the laws of survival that I learned through a whole lot of trial and error. Let me walk you through them.
First off, control your emotions. If you trade angry or you trade euphoric, you're going to pay for it. Second, wait for a good setup, an A+ setup. Stop chasing garbage. Third, and this is a big one, always use a stop loss. Every single trade, no exceptions. Fourth, trade less, think more. And number 5, the rule that ties it all together, you have to keep a trading journal. Because your journal, it's your coach. It's the mirror that doesn't lie. It's where you hold yourself accountable. You write down your setup, why you took the trade, and what happened. This is how you turn random, painful experiences into structured data. And it's that data that builds real, unshakable confidence.
Okay, so how does all this manual discipline, all these hard-won lessons, how does that connect to the world of algo trading? Well, this is where it all starts to click into place.
This was the light bulb moment for me. When I started backtesting strategies using Python, it became so ridiculously clear. The most profitable algorithms, they weren't doing anything magical. They were simply executing the exact same rules of discipline that I had struggled so hard to follow myself, but they were doing it perfectly and with zero emotion.
And that really brings us to the most important point of all this. Manual trading teaches you discipline by making you feel the pain when you break your own rules. An algorithm simply follows the discipline you've already built. It's a tool that enforces the rules you learned the hard way. So the big takeaway here is simple. Don't jump to automation because you think it's a shortcut to avoid the hard lessons. It's not. Earn your stripes first, learn the rules, understand the psychology, build that discipline manually. Then, and only then, you can use automation to scale it.
Honestly, those foundational lessons, paid for by all my early mistakes, they're the bedrock of every single automated system I build today. Master your mind first, then you can master the machine. I'll see you for day 8.